How's it going, everyone? This video is going to be about building a model based off of internal and external liquidity concepts. Now, if you don't know what internal and external liquidity is, please go ahead and check out the video linked in the top right before watching this video. For those of you that do, we will go ahead and hop into a PDF, quickly review, and then talk about the model. So let's get started. Now, the first thing you need to understand is what is internal liquidity. Internal liquidity is just a fair value gap. Now, if you don't know what a fair value gap is, we will quickly review that, but I also have a video on that as well. It is just a 3 candlestick pattern, 1, 2, 3, in which the wick of the first candle and the wick of the third candle do not overlap, showing aggressive price action through this area. So you can see 1, 2, 3, these candles do not overlap. Now, the next thing to understand is what is external liquidity. External liquidity is simply highs and lows. So you can see here we have a range. We have a swing high here. We have a high with a lower high on each side, creating a high. So that is external liquidity. Similarly, down here, we have a low with a higher low on each side, creating a swing low. So this is external liquidity, or sell side liquidity and buy side liquidity. Now, the next thing we're going to cover is the relationship between the two. So since price swept and could not displace through this external liquidity, it is likely to reach back where? Internal liquidity. Now that price reaches internal liquidity, it's respecting the fair value gap. And you can see this closure here. Where do we expect it to go? External liquidity. So you can see price moves from external to internal and back to external. So now let's take a look at the actual model. So this model is just going to use a higher time frame level. Dropping down a time frame, I will look for internal or external liquidity. Then on the lower time frame, I will look to make sure I'm in a kill zone. I have a stop rate, a market structure shift, a fair value gap, and then I will target 2R. So for an example of this, when we swept this external low and looking for price to trade to internal, then on the lower time frame, we get a market structure shift, a fair value gap, and targeting 2R on the way to this fair value gap. Let's go ahead and hop into TradingView and go over a few examples of this. So here we are on NQ daily chart, and you can see that we took this low right here. Now with this super aggressive close down here, I'm not expecting a retracement right away, so I'll let a few candles form. Now if we're going to mark this out, we have a low with a higher low on each side, forming a swing low. Now let's see what the next candle does. We get aggressive displacement up, violating this fair value gap right here. So if I'm going to look for external to internal, I have a fair value gap resting right here, right around discount of this range here. So using that as my draw on liquidity, or looking for price to draw to this higher time frame level, I'm going to drop down to the hourly chart. So zooming in here, you can see here we have a candle where this wick does not overlap with this wick, so it is a fair value gap. It is also the new day opening gap. So having this marked out as our fair value gap, let's see, now that we have internal liquidity, if price reaches into it during a kill zone, can we frame a trade? So here we are going through London. So now that price reached into this fair value gap, if it is going to continue to trend higher, and this is going to form a swing low, I'd anticipate price going from internal to external liquidity. So now that we have our higher time frame draw, which is this daily fair value gap, and then dropping down a time frame, we have a move from internal to external liquidity. Let's drop down another time frame and see if we can find a setup. So down here on the 5-minute chart, you can see we reach down into the hourly fair value gap, and we come back up and shift market structure here. So now I'm looking for the fair value gap. And if you notice, we have a fair value gap here, as well as a fair value gap here. So looking to take an entry, I'm going to take an entry on the start of this fair value gap, but I want to allow it to be able to trade down into this fair value gap. So I'll put my stop on this fair value gap candles low. Then I'll be looking to target 2R, which you can see is just at these highs. Even though I could target 3.16R with a total run to the fair value gap, I'm just going to be looking at 2R, and I could hold runners if I want to. So letting this play out, let's see what happens. So there we get tagged in. And we get a move higher towards these highs, completing the move from internal liquidity to external liquidity. And skipping ahead, you can see after hitting our TP, if I would have moved my stop to break even on runners, they would have been stopped out before reaching the daily fair value gap. However, if I was just holding my whole position to the daily fair value gap, keeping my original stop, it would have worked out as well. But for this model, I'm just focused on catching 2R. Let's hop into the next example. So zooming back out to the hourly chart, you can see we have our daily fair value gap, which was just targeted in the previous example. So we have an important daily level. We just swept an hourly high, so external liquidity. And do we have internal liquidity resting below? Well, this fair value gap was mitigated on the previous example. We have a fair value gap down here, and that will act as our drawn liquidity. So I'm looking for price to trade off this daily level and then use the hourly external to internal to frame a trade. Let's hop back down to the 5-minute chart to see how we could frame something. So now down here on the 5-minute chart, you can see that we have price sweeping this high here, and then our drawn liquidity is lower. So we're looking for price to displace below this low to give us our shift in market structure. And there we get displacement below this low. Now the next step is to look for a fair value gap. So here we have a fair value gap. So if I'm going to look to enter a position there, where would I want to have my stop? Well, here you can see most of this price action is balanced above, but in here it's a little bit messy. Now I want to have my stop over opposing candles. Let's see what that would look like. But if it's a little messy, let's go ahead and zoom out a time frame. So to the 15, you can see here everything is balanced. You can see there's no fair value gaps, but we do have a little inversion right here. So ideally I'd want to have my stop above that inversion. Then look to target 2R. Going back to the 5-minute chart, another thing I could do is take a position at the same spot, have my stop on the fair value gap candles high, and then look to target 2R. So let's see how both of these work out. So here we get tagged in, hit 2R on the first, and 2R on the second. So you can see either one of these would have worked. This is just a more conservative stop loss than this one here. Let's go ahead and let this play out and see if we do reach that hourly fair value gap. For this next example, we'll also be on NQ daily chart. And so taking a look at the last few days of price action, what do you see? So if just marking out previous day's highs and lows, you can see that Thursday here swept Wednesday's high, and then Friday reversed, closing below the opening price here. And you can see how these previous day's lows are all lined up here, and that is low resistance liquidity. So looking for a point of interest, the two spots that I look for like this is the opening price, as well as the mean threshold of this up close candle. Now, just in terms of premium and discount of the range, it makes more sense to look at the mean threshold here. So dropping down to the hourly, I want to see when we enter a kill zone or reach the point of interest. You can see as this fair value gap is holding, it doesn't seem like the opening price is going to push us lower. So we're likely to reach a little bit further up towards the mean threshold of this. You can see we're into London now. Do we form a high? Nope, we do not. We just kind of consolidate. And then as we enter to New York, we do reach up into the mean threshold, so this point of interest. Now, if you notice on the hourly chart, it is a little bit messy here, right? So what can we do? We can move up a time frame to the 4-hour, and this cleans it up a little. You can see we have a fair value gap right here, or internal liquidity. And what do we have resting below? These previous day's lows. So that is our low resistance liquidity or our target. So now dropping back down to the 5-minute chart, let's see if we can find a sweep and an entry on a fair value gap. So here we are, we get a little sweep of this 830 high, and then we displace lower, creating quite a large fair value gap. So getting our shift in structure here. So with our sweep here in our shift in structure, we have a very aggressive displacement down. Now, ideally, I don't want to see this met with displacement back up, because if we have expansion into expansion, it's likely to go higher. So I can either look to take an entry either at a premium of this range or at the consequent encroachment of this fair value gap, or I can let it start to trade away before I enter. In this case, we're going to just take an entry at the consequent encroachment with my stop on this high, and then looking to target 2R. So there we are. Let's see how this works out. And there we go, we hit 2R. Zooming back out, let's go see if we run these lows, which was our draw on liquidity. And we do go run those lows. So if I was to leave runners, it would have worked out. However, I'm just interested in catching 2R with this model. Now in this next example, I realize that not everyone can look to trade intraday, so we're going to go over a higher time frame example. So if you remember from my important liquidity levels videos, previous candles high and low are important liquidity levels. So you can see here, previous month's low is an important liquidity level. From here, I'll drop down to the daily chart. So here on the daily chart, you can see we took previous month's low before making a move higher, creating equal lows. These equal lows are then ran out. And so what do we notice on the daily chart here? Well, we also have this kind of megaphone pattern here, which I'll talk about in a future video, but we have external liquidity looking for where? Internal liquidity. And another thing you can notice is this is sitting right around discount of this range. So with that idea in mind, we'll drop down to the hourly chart and look for a shift in structure and then a fair value gap entry. So if we're looking for a shift in structure, we have the down move here. I want to see a market structure shift here and then a fair value gap entry. So here we get a market structure shift. And what do we have right here? A fair value gap. So looking to take an entry there, my stop on this low, and then looking to target 2R, which puts us right at these highs resting right below the fair value gap. Let's see how this works out. Takes a little bit of drawdown here. And there we go. We go and hit our TP. So this is a great example of moving timeframes around. If I can't trade intraday on the daily, hour, and 5-minute chart, I can move that up to the monthly, daily, and then hourly chart to get an entry for either a swing trade or just a larger time frame where I don't have to watch intraday movement. So here we are with another example on the higher time frames, and what do we notice right here? We have internal liquidity or a higher time frame level on the weekly chart. So I'm anticipating this to go internal liquidity to external liquidity or reach from this fair value gap to this high. Now dropping down to the 4-hour chart from the weekly chart, what do I want to look for here? Well, I could just use this as my entry time frame and look for a shift in market structure and a fair value gap to then go higher, but I can also wait for internal to external on the 4-hour chart and then drop down lower for an entry. Let's see if we get that. So here, there's actually a few ways we could trade this, but we reach this external liquidity. Now we have internal liquidity. So I would anticipate price dropping down into this internal liquidity, but since it is against my higher time frame bias, I would rather not trade this retracement, wait for the retracement to occur, and then trade the expansion out of this. So let's see what the next candle does. Here we do get that move down. Now that we're internal, looking for external. Let's drop down to the 15-minute chart, looking for this move from the fair value gap to this high. So now that we're down here on the 15-minute chart, you can see we have that internal 4-hour fair value gap reaching for the external high. I'm anticipating this to be a market maker buy model. Do we have a shift in market structure? We do. So now from here, I'm looking for a retracement to a fair value gap, which we do have right here. Now let's see how this plays out. We actually make another fair value gap right here. Why would I prefer this one? Well, it's just closer to a discount of this range, as well as lining up with the bodies of this breaker block here. Now, if I'm looking to trade this, I want my stop on the low or below the down close candles here. And then I'll be looking to have my target at 2R. Now this is a little bit over this high, but that is fine because we are trading with the higher time frame order flow. Let's see how this works out. Here we do get tagged in. And there we go, finally hit our TP there. Now, if we zoom out here, you can see why it's easier to trade with the higher time frame order flow. That retracement I was just talking about earlier, if I didn't reach my 2R, it would have came and stopped me back out. But here, I'm anticipating price to reach for this high. So even if I was to let runners go, I can get a very high R trade, but let's see what happens. And there we go, we continue higher. I hope you found this video and model helpful. I did give a few examples of higher time frame setups as well as intraday setups. Now, I personally prefer a daily, hour, and 5-minute setups as it aligns with the formation of the daily candle, but I also dropped a few higher time frame setups as I've been asked in the comments sections to do so. Now, I hope you have a great rest of your day, and I'll see you guys next time. Have a good one.